Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, February 23rd, and my name is Raleigh White, and I'm coming to you live from a sunny, crisp, cool day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a special focus on options and how to trade them. He's going to begin by giving us a midday market analysis and an update on those major stocks that he has his eyes on. And then he's going to pivot, folks, and spend the rest of the section talking about options, beginning with what is an option and how to buy them and price them. He's going to share how to select, place, and work an option order. He's going to discuss when to buy in the money versus out of the money options. And then he's going to shift and talk about what is a spread, how to price a spread, and is legging into a spread ever a good idea? And finally, folks, when to do a spread versus regular individual options. From Roger's perspective, he wanted to do a little bit of a masterclass on option trading, and he specifically wanted to do that today. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we're going to address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Also, folks, please keep to the topic. There are no political discussions allowed here whatsoever. And also keep that side chatter between one or two of you to a bare minimum, because all it does is interfere with the rest of us that are really trying to learn from the education and information that Roger's sharing. Because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning for Roger's pre-market briefing, you'll note that there were several key catalysts today that we needed to keep our eyes on. Number one, as far as chips are concerned, we noted that AMD and ARM were both down 1% coming into the open. On the basic material front, we noted that IP, PKG, and SW were all down 5% coming into the open. On the finance front, we saw that coin was down 1%, largely because we see the deteriorating prices in Bitcoin, and Mara was impacted, and MSTR as well, though they're not S&P 500 companies. On the energy front, we noted that Dominion and OKE were both scheduled to release their earnings before market opened. And on the retail front, we noted that Domino's was getting ready to release their earnings before market open. On the Fed front, pretty quiet day. We had a factory order scheduled to come out today, and we have one FOMC speaker on tap, and that's all we had there. Now, as far as catalysts are concerned, why do we even discuss these? Well, from Roger's standpoint, if there's information that's known or will become known during today's trading session, but it's not yet priced into the market, well, that represents a volatility flashpoint that we need to be aware of. For example, if we're taking a look at a stock in basic materials, it's probably good to know that that sector is down about 5% on some key participants coming into the open. Now, as far as Roger's pre-market stock watch list is concerned, these are the large caps that he has an eye on this morning before the market opened up. There were a total of 21 tickers that he's looking at, 8 to the short side and 13 to the long side. You'll note that MTB has an asterisk by it, and Roger indicated that this was a really nice looking A-line setup from his perspective. Now, folks, one thing you need to take into consideration here is that these are legitimate tickers that Roger's got his eyes on, once again, in pre-market. Now, they're on his watch list. That doesn't mean he's automatically recommending that you trade these stocks, but they're on his watch list for a reason, and that's because they have the potential to set up to be trades that he may want to day trade or swing trade. And if any of those setups are met, more than likely he'll take those trades, share them in the trading pit or in one of his other premium alert services. And as far as his pre-market thoughts are concerned, folks, coming into the open today, the futures markets were all moving relatively sharply lower in overnight trading. Okay. We noted, however, that the bonds were off, but they were still high up in a range, trading right at key level of support. And the SPY and the QQQ remained moving sideways just below resistance. We also noted that the MAGs and SMH, so the chips in the MAG sector, were all inching higher and appear poised to make a move because, once again, everybody's going to have their eyes on NVIDIA earnings on Wednesday, and that does have the potential to lift a lot of votes. Okay. Now, as far as momentum is concerned, he noted that companies that were making 20 and 90-day highs were significantly outpacing those making 20 or 90-day lows. So, not much momentum to the downside, more momentum to the upside. And he also noted that the sector looks like it's beginning a slow rotation towards more speculative stocks as they're starting to creep up in the pecking order. Finally, folks, he said, look, it's Monday. And as far as Mondays are concerned, he basically says we should be cautious in the morning because that's typically a time to liquidate. And he'll look in the afternoon, starting to take on new positions. And based on what we saw in the overnight market, his question was, are we going to have a run day or are we going to have a chop day? And he was going to look at the ADD before the markets open to basically determine that. But based on the fact that we were seeing a pretty significant down price move in the overnight markets, he was concerned that we might have a run to the short side today, but it could also be a chop day. And he'll talk about that more when he gives us his midday market analysis. And finally, folks, the impact of NVIDIA earnings. A lot of eyes there. And as I mentioned earlier, NVIDIA earnings come out, and if they do well, if they sparkle, it has the potential to lift a lot of boats, including, once again, the chip sector, big impact on the QQQ and the SPY, and this could be a catalyst for upside move. Finally, once again, Roger liked to remind us of the fact of, look, he said he's not talking gloom and doom here. The markets are all sitting basically at all-time highs, all right? And he's not worried about them basically, having a big drop off. He just says they're at highs and they're just not doing much. There's not been much movement whatsoever. And from that standpoint, very, very difficult to look at swing trades when you see all this sideways momentum. And once again, with so many markets up high in their range. So we're delighted to have such a good group of people here with us as we get ready to start today's session. This is a fabulous community. Roger's family here is wonderfully supportive. We're here to help each other, and Roger likes to reciprocate by giving you information that's going to be actionable for you. And as far as today is concerned, once again, he'll be covering a range of topics, and the focus today will be on options and how to trade them. Now, he's going to start by giving us a midday market analysis and an updated watch list. And then he's going to pivot and he's going to talk about what options are, how to buy and price them. Then he's also going to tell us how to select, place, and work an option order. Then talk about when's a good time to buy in the money versus out of the money options. What's the difference between those two? He's also then going to talk about what is a spread and how to price a spread. And when it comes to legging into a spread, is that a good idea or not? Well, he's going to share some pretty interesting thoughts on that. And then finally, when is a good time to look at doing a spread versus trading a regular individual option? Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, and remember the ground rules. Always be kind and supportive in your posts. Number 2, please keep to the topic. Number 3, no political discussions whatsoever. Number 4, folks, keep that chit chat between a couple of members here to a minimum. Really, all it does is interfere with the rest of us that are looking to learn from the information and education that Roger's going to be sharing, because after all, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to the team. And man, do we have a team here this morning. We've got Matt, who's definitely looking seriously at the markets. I love Matt. He's he's focused. We've got Roger. He's got the palm trees behind him. He's been studying the markets. And on the West Coast, we've got Kane Shea here with us. Guys, it doesn't get any better than this. Good morning, everyone. It's Monday. Great to see you. How's everybody doing?
Excellent. How are you doing?
I'm doing just super, Roger. Had a wonderful weekend. And once again, I mean, I'm here in Central Texas. All of my family is in the Northeast, and they're buried under snow.
Oh, yeah, it's yeah, we started getting a little bit of cold here yesterday. It was this on Saturday it was 85 degrees and right now it's like 40 degrees. So it's one of those days. How are you
And
doing?
I,
How are you doing, Kane? How's everything on the West Coast?
I'm doing great. It's the exact opposite. We had a couple cold days before, and now it's super warm. So,
Gotcha. Gotcha. It's just one of those. Yeah, California is kind of beats to its own drummer, right? I mean, it's just kind of doing its own thing.
well,
Its own thing.
it always reminds me of the fact that we are a huge country,
We
and
are a
we
huge
are when it comes to weather, it's regional in its nature. But anyway, so the folks up in the Northeast, my hat's off to you. I hope stay warm, stay safe, and because it's a lot of no fun. Anytime you have one of those nor'easters with all that moisture, colliding with all that with all that cold, it's a problem. But we're here, we're warm, we're sound, and Roger, sounds like you got a great agenda on tap. And the reason why I say that is that every time we do a session, I know there's always questions, and they're basic questions about options. They're just,
yes.
and so to be able to say, hey, let's have a little master class and let's talk about options, I think the timing of that is great. So once again, I'm glad you have that on the agenda. It's obviously going to be recorded. We're going to archive it. We're going to save it, but it's an exciting session. And then, like I said, we have Kane with us as well, and he's going to help us with some insights on the markets, and he's got some exciting stuff to share with us as well.
That's true. Very, very. We have a lot of very interesting, exciting things. And let me say everybody, good morning. Good morning, YouTube. Good to see you. Good morning, everybody here, or good afternoon now. I'm glad everybody's here. We got a pretty nice, big, packed room today. A lot of stuff to share. Let's start off with asking you guys a couple of questions. What was the trades we had in the swing trades we took off today, Matt?
Was Moderna and Verizon.
Yeah. Did anybody make money on Moderna and Verizon? Let's see if people did well on those. Sandra's happy because I got a bunch of emails. Let me know how you did on those trades. I'm curious if you did well on them. Good, good, nice, 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 excellent, excellent, good. Mm. Now let me ask you another question. How about Micron, Tesla, and what was the other one? I forget. We put too many trades on. Was it Micron, Tesla, and what was it? What did we do? I already forget. Tesla, Micron, and Bank of America? And Bank of
BAC, yeah,
America.
yeah, yep.
Yeah, yeah, yeah. They remember better than I do. All right. Nice. Nice. Excellent. Excellent. Good. Good. That was from this morning. That was from this morning. We did some trades in the pit. So we have 5 trades in the last 24 hours that we closed that are winners, including 3 in the pit today. Bank of America, Micron, and Bank of America, Micron, and Tesla. All right, excellent. Your lighting makes me look green. Yeah, it's the lighting. It's definitely the lighting. I gotta change the. Yeah, I need to do something with the lighting here. Absolutely. It's also the color of my shirts. But
And
you
it's
know what?
also the color of money.
And it's also the color of money. But as long as you could see me, that's all that
We
matters.
can see you, we can hear you
Yeah.
great.
All right. So let me really quickly go through some stocks that are on my watch list. I'll give you a session on options, and then we're going to get into something that we're going to have a lot of fun. All right. Look at that. Look at you, Marlene. Made money on all of them. Excellent. Yeah, Micron, we were in for like 10 minutes. It was a quick scalp. Okay. So these are my shorts. Please pay attention, okay? Sophie, which by the way is coming up to the VWAP right now. Looks like it wants to bounce. Good for you, George. Good for you. Good. Good, good, good. Sophie. Path. Nice breakdown. Look at that. The look at the daily and look at the 5-minute chart. They look exactly the same. That's very nice right there. You got Netflix. A little choppy, but not bad. Microsoft. I don't like when Microsoft is on my short list. That's not
Yeah,
good.
I know.
That's not good at all.
We like them as a high flyer.
Yeah. Microsoft, SMR. This is a nuclear stock. PanW. Unity. That's a nice breakdown on Unity. CRM. It's a very nice breakdown on CRM, but we got earnings, I think, tomorrow or day after tomorrow. Toast. Toast is toast. HPQ. Now, this stock has been on my list now probably for about a month.
Yeah, it has.
Nothing changed. Nothing changed. No updates there. Okay, now let's do the long list, and we'll move into our education session. PG. Procter Gamble looks really good. Philip Morris looks good. That's an A line right there in Philip Morris. That's a defensive stock. As the SPY, I say that as the SPY is bouncing off the 100-day moving average. Right off of the 100-day, by the way. Look at this. Look at that.
Yeah.
Hopefully it'll come back up here. Okay. Okay. Just putting this back where it belongs. It's a nice A line right here. Stock. Sorry, I'm just trying to look at a few things here. ED bouncing off the 15. It's got a high volume candle. It's trying to undo it right there. BIIB. Johnson Johnson too. Still on my list. Verizon looks really nice. Still. Coca-Cola looks really nice. Merck. Really nice. MNST. It's a beauty right there. CL. A lot of defensive stocks. Notice that. McDonald's. These are defensive stock, folks. If you look at Micron, they're not looking bad, but it's down today. I mean, I'm doing these as scalps, but that's about it. And I told you it was a scalp.
So do you like Micron on your long list, Roger?
Yeah, I do off the 8-day, but for this is going to be a longer term trade.
Okay.
It's not going up right now. It's kind of just bouncing. So I do like it, but it's you gonna have to give this one a little time. I do. As long as it doesn't break this as long as it doesn't break this trajectory right here that it's building. Here, let me show you. As long as it doesn't break this trajectory right here, looks pretty good.
Mm-hmm.
I do like it. It's probably going to bounce off the 8-day up here, and it made a higher high. But again, we're just kind of consolidating. So you could trade around it. It's got a good range. I don't think it's going to run away with the circus, but I would be careful right now with this stock. That's why I gave it as a scalp. I didn't give it as a. And I specifically got out right when we hit the VWAP. I wasn't expecting it to go much higher. Okay, look what I wrote here. I'm going to do something I usually don't do. I'm going to do it because the market is so darn choppy. I want to go to long chip stocks here since SPY is bouncing off the 100-day. Go long Micron right off the 8-day EMA. Right there. Right here. Okay. So that is my long list, and I'm sticking to it. And I still do like Micron. You're going to have to give this a little, it's kind of bouncing back and forth. Okay. So let's talk options. All right. I'm going to talk about options today. Options, options, and more options. And I want you guys to pay close attention to what I'm going to be talking about today. It's a lot of really important stuff. Okay. Really, really important stuff. Let me just check something. Interesting. I thought I would have the stock would have been up today with the rest of consumer staples, but I guess not.
Right. So when you just one quick thing, Roger,
Yes.
this morning before you signed off, you said, today could be a run day or it could be a chop day. And I'm going to know more when I take a look at the ADD, before the market opens. So what's your assessment at this point in time? Are we more chop?
We
or
have a
is that-
rundown day. We have a
Yeah,
pure
run
volt going
down
down.
day, exactly.
ADD's at 14 to 50. This is a rundown day.
Yep.
We're having a rundown day right now. As of right now, this is a rundown. There's no question about that.
Mhm.
As a matter of fact, I mean the equal weighted. The Dow is down 1.5%. We're down over 1%. The Russell, the small caps are down 2.25%,
Yeah. Okay.
and mags are down 1.5%. This is definitely a run day.
Yep.
Yeah, anything over 1% usually have a run day. Look at how clean the Volt is, and look at what happened when the SPY tried to. By the way, folks, you guys always want me to teach you this, so might as well focus on it right now. Trading Zone Live, divergence between the Volt, we talk about it all the time. So look, clean move on the Volt, right? Nice clean move on the SPY. This is the SPY. It follows the Volt. Volt is still going down. What does the SPY do? It comes up, and then what does it do? Bingo, comes right back down.
Comes right back down.
That's a very high probability short trade right there. Just again on the SPY. Volt is cleanly going down. SPY is going down. SPY moves against the Volt. Volt is still going down. The SPY reverts back in the direction of the Volt.
Yep.
Just wanted to show you just a random trade right there.
Mhm.
Okay. All right. Be careful today. We have a rundown day so far. The only saving grace is that looks like we want to bounce on the 100-day moving average on the SPY. And if that's the case, it's going to turn into a flag, like a flaggy kind of a day, or maybe like a little bit up at the end of the day. But so far, this is a rundown day. There's no question about that. Whenever you have ADD below 1,200 or 1,000, it's a rundown day.
Yeah, and you kind of felt that based on the way the futures were coming into the open, that there was
I
going to
also-
be that potential. Yep.
And I also said something really important today. I said, folks, for the last 2 weeks, I'm just going to say it again. For the last 2 weeks, Mondays have been Tuesdays and Tuesdays have been Mondays. I also mentioned that too. That was the first thing I said this morning. Does anybody remember that? I said we've been having run days on Mondays and choppy days on Tuesdays instead of choppy days on Mondays and run days on Tuesday. I also said I don't know if it's going to happen again today, but that's what we've been seeing for the last 2 weeks. Do you remember that? I said it only 4 hours ago. You have to actually listen carefully to what the words that come out of my mouth. Jill says yes. So yes,
Yep.
I preface that as well. So okay, Vano says yes, Kathy says yes. Remember that? I said, hey, the last 2 weeks we've been there. You could look at the chat. I'm not making this up. It pays to come to the morning show. It really does. I do give you guys some pretty good information there. Okay, so yeah, but again, this thing right here, it's very sticky. The 100-day moving average, it's very, very sticky here. That's a pretty strong support right there. And also, I don't want to switch charts. And also, the 8-day EMA, we haven't busted it on the SMH. And those two have been holding really well this entire run. Okay, just pointing it out there. Kane, do you want to add anything before we move on?
No, I mean, there's not much more to say. Everything's running today. And as you pointed out, in the last couple of weeks, the Mondays have been, because of all the news and volatility over the weekend, you've gotten that move on a Monday instead of a Tuesday.
Yeah, we've been getting a lot of news over the weekend. And that's the other reason, folks. On Friday, I told you that I don't want to hold positions over the weekend. And I dump our positions on Friday. So again, I'm being extra cautious right now. Because of what's going on and because of the volatility. So just folks, we have to be mindful. You got to be patient. You got to be a little nimble here. You got to be really, really cautious, and good things will happen. I mean, good things are happening. Our win rate, just so you know, Raleigh, I posted this a little earlier, but on our swing trades here, this is not including today. This is just closed trades. So since January 1st, all our swing trades, we have an 86% win rate. Our profit factor is 3.59.
Oh my gosh, that's insane.
That is insane. That means for every dollar we lose, we make $3.59.
Yep.
That's a good, I'll take that trade. With an 86% win rate, average days in trade is 5 days, and average return, winners and losers included, is almost 24% net. Net. Look at the size of the gains versus the losses.
Yeah.
And this is gap to green, A-line, stealth search, quick strike, and true trend.
Yep.
That doesn't even include the pit, where we have that's all our swing trading programs.
Yep.
That does not include the pit. That does not include weekly cash flow, which have had a 100% win rate since the beginning of the year. So I can't really calculate the profit factor. I'm sorry. Certain things just can't be done.
And this has been against the backdrop of a very difficult market to swing.
Most
you
difficult
have been
market.
Very, very selective, Roger.
Yes, very selective, and that's how the balls bounce. All right, now, see, Ken, I do listen to what you tell me. Ken said to me, it's not every dollar you risk for every dollar you make. It's every dollar you lose for every dollar you make. And he's right. I'm like, okay, right. You're right. When it comes to math, I'm not going to argue with a post-PhD in math from MIT. That would be really, really stupid.
Would not be smart.
That would be dumb. That would be just really, really dumb. And I don't like to do dumb things. I don't have a reputation for doing dumb things. Karen said, I've been mostly scalping in this market. Yeah, I haven't heard from you, Karen. I've heard from everyone except you today. We've been pretty busy this morning. And again, we're reverting back to the volt. Yeah, the volt is not letting up. I mean, look at this thing. Straight down. Just brutal. By the way, we're coming down right now, the SPY. We're coming down to the bottom of the value area. So there's a really good chance we're going to bounce here. This is where 70% of all trading occurred in the last 5 days. And the point of control, the most volume occurred at 684. So I think we're going to start bouncing right now, unless there's another catalyst to come up. Also, and folks, please, I don't want to get political, but in the last hour or two, I know our president's been very vocal about the Supreme Court giving him even more power and 15%. And I don't know what the purpose of all of this is. Just say I lost. Let's move on. I made a miscalculated bet. I thought it would work. Just say something like that and move on. Why do you have to just be a good loser, you know? You remember, best loser wins. All right, so options. Let's talk a little bit about options. Okay? All right. So what are options? Options are derivatives. Options are not real assets. In other words, they don't have any of their own value per se. They're based on the value of it creates a derivative of the asset. So in other words, we drive the car, okay, and the things around. Let's say you know how you see in old movies pictures of kids clinging onto the back of a car with their skateboard. Mm-hmm. That's what an option is. You're kind of it kind of goes with it. Okay, kind of goes with it. By the way, Bodine, none of those trade deals are in the books. There's not one trade deal that's official in this world that has not been signed. There's not one for any country. We don't have a trade deal with any country that's official. We have an agreement to agree to agree. No trade deals have been done. Okay, so let's move on. I don't want to keep talking. I'm going to turn the chat off. I don't want to talk about this. All right. So, and then within an option, here, let me just kind of draw you a picture so you could see what it looks like. When you buy an option, what you're buying a pie. And the pie has different slices. And as the option move, these slices, they're like AI slices, okay? They're not actual slices. They're like AI. They're like slices that can unslice themselves. So, for example, let me give you, so this is, let's say, implied volatility, okay? IV. And this is say, theta, okay? Theta, okay? And say this is gamma, for example. This is delta, okay? I don't want to get into all of it. I don't want to get into the nitty gritty. So let's say the stock moves up $5, okay? Well, this, for example, will become that big of a slice, and this will become smaller slices. Now, not only can the slices change shape, change size, but the circle can also change size, get smaller or bigger as well. Therefore, these pricing models, all of these assets are fixed, but they can fluctuate. So looking at options individually doesn't really make too much sense because that option will always in real time shift. This piece will become smaller, this piece will become bigger, this will become smaller, this will become smaller. It moves from one side to the next. Okay. Okay. All right. So options are always fluctuating. Hence, I don't like to take them under the microscope because I don't find it being worth of anything. The only thing I care about really is how much time does the option have? How much time does the option have? All right. And how far or in the money the option is. Those are the two main factors that I look at. So to give you an example, okay, just to give you an example, let's just take Google, okay? I mean, it doesn't really matter what stock we look at, but let's say Google. You're looking at Google, and Google right now is at 13.50. And let's say we can either buy the 13.12.50 option or the 13.50 option, 15 option, okay? If we buy the 12.50 option, we'll be in the money, which means the price of the option will be inside all of this. That means it's an in the money option. When the money is out of the money, when the option is out of the money, that means it's beyond the current premium. It doesn't have any intrinsic value. Intrinsic value is what signifies if an option is in the money or if it's out of the money, how much intrinsic value it has. So basically, this option has a lot of time value, the 315. The 312.50 has it doesn't have a lot of time value, but it may have a lot of time value, but it has a lot of intrinsic value. This option does not have it doesn't have any intrinsic value. So when you buy a 315 option and the stock is at 313 or 312, this price right now, you're buying air. And that air will decay much faster than an option that has intrinsic value. Intrinsic value means that the option actually has part of the underlying within it. So it makes that pie bigger and more stable and causes it to go up and down a lot less. Investors trade in the money options. Speculators trade out of the money options. When we do our scalp trades, we are relying on the implied volatility of the option, that piece of the pie that I showed you, to double sometimes in 10, 15, 20 minutes, because the folks here are speculating that option is going to get to 315. And if it does, it's going to be really expensive. So out of the money options play just as vital of a role in what we do as in the money options. You know, I love people, I only trade out of the money options. I only trade out of the money, or I only trade in the money options. No, you trade what the market gives you. Okay? If the stock is moving slow, and you're not expecting a big move right now, there's no reason for you to trade out of the money option, okay? because the speculators are not speculating on that stock. Now, if the stock is moving like this, when we made money on it today, moving like that, that's when you want to buy out of the money options, because those out of the money options are going to be reacting to this. See, this turned orange, orange, orange. That's high volume candles right here. Okay. So my point is, my point here for you, all of you, my point is that there's a time and a place for everything. There's a time and a place. So to give you a really good example, I was talking to my wife about this. Let's say you go to Europe, okay, or you go to West Hollywood in Hollywood Hills. The last thing you want to do is have a big car. You're not going to be able to get around. You're not going to be able to park anywhere. You'll be stuck all the time. A little Mini is a great idea if you're in West Hollywood driving up Sunset Hills or Hollywood Hills, or if you're in Europe where the streets are small and narrow. Now, if you are in Jacksonville, where I live, where you have literally unlimited amount of space and the roads are wide and you can pretty much park anywhere you want. SUVs like Mad Drives are beautiful. We live in it's like living in LA in 1950s here in Jax. So again, what car is best? It depends on where you are at. It's the same thing with options. It's the same thing with tools. A lot of you, and I mean a lot of you, you have a very binary sense of the markets. It's this or this. It's yay or nay. It's I trade these or I trade this. No, you trade whatever the market gives you, and you use specific tools to take it. Because everything the market does, if you know your numbers, has an edge. Every breakout has a specific edge or lack thereof. Every pullback. So you need to be very, very flexible. And you need to know how to use the right tool at the right time. When you go to a Chinese restaurant and they give you soup, you don't reach for the chopstick, right? When you eat your hot and sour soup, you don't reach for the chopstick. And when you're eating noodles, you don't go for the spoon. You see what I'm saying? So don't be so principled, and don't be so hasty when it comes to trading. I only trade breakouts, or I only trade pullbacks, or I only trade you trade whatever makes you money if you know how to do it right. So the key to being a good trader is always trading the best hand at any given time. And that includes picking the right option. So how do you know when to pick an out of the money option? How do you know when to pick an in the money option? How do you know when to do a spread? Let me explain all this to you. Let me break it down for you, okay? When you're trading, when implied volatility is high, like it is right now, where's VIX right now? VIX is at 2144. You typically want to go in the money. In the money. If you're trading for more than half an hour, scalping for more than half an hour, you want to go in the money. Okay? Because implied volatility is going to be too expensive. Let me show you a good example. I was showing this to everybody last week, anybody who would have listened to me, so let me just show you real quick. So remember, we were looking at SPY options, and we were looking at one-day expirations, and they were like, here, let's see. Where's the SPY? So yeah, 681. This was last week. This was $2.50. Now it's $3.40. So, and that's about as high as it goes. I mean, unless the VIX goes to 40, and it doesn't, unless like for a day or two it does. But generally speaking, these options are between $2 and $3. They always are. So I can always tell. Now, I've seen times when the VIX goes to 40, and these add the money options will end up costing $6 or $9. And we just don't trade those days. Because even if the SPY goes up or down a point or two, those options, they just don't fluctuate. They have already, that move is already priced in. Hence, they look just like earnings options do the day before earnings, which is something we don't trade. So my point is, folks, options, it's never one size fits all for options. You have to be very, very, you have to be nimble in how you think about options. And by the way, Tesla's still going down from that trade we gave. And it went a roll around and then came right back down. Okay, so let's talk about strike prices. If you are swing trading, you should be using a delta of 0.7D. Okay? If you are day trading, you should be using a delta of 0.7D. The only time you should be using at the money or slightly out of the money options is if you are scalping. You should never be or doing a spread. You should never, ever, ever be doing out of the money options on a regular trade because you're literally buying a piece of ice, a real thin piece of ice. And that's not good. That's not going to get you anywhere. You don't want that. Okay. You really don't want that. Okay. So please be careful. Please be really careful when you're trading. And again, you should always know if ahead of time if a trade is a scalp or if a trade is a regular trade. And the only time you should be scalping is if you have huge volume. And I'm not going to get into that right now. We don't have time. I've talked about that several times before, but you need to have volume. Without volume, you got no scalps. So, and that volume should already be there before you enter the trade. So you should have no excuse on what type of trade you are taking. Now, let's say that the stock is very expensive. Let's say it's a $420 stock like Micron, okay? And you go to the option chain and you're like, Roger, the option is $22. If you make half a point, or if you make $2.50 on this, I'm going to make like 5%. What's in it for me? Well, what do I always tell you guys? If the options are expensive, you do a debit spread. A debit spread is kosher as long as your premium is 50% or less of the premium. If it's not, then you do a credit spread, you see? So, for example, we're at 0.52. Let's say we buy the 420 and you sell the 422.50. The spread will cost you about $1.15, less than $1.25, you're good. Now, if you did that and you bought this option when Micro went from here to here, do you know how much you would have made? Does anybody want to tell us who took that trade? Anybody take that trade versus just buying and add the money option? Did anybody do that trade? I know I had over 1,000 people see that trade, and I'm curious if anybody did that trade. Okay. If you would have done this trade, instead of making 5% on Micron, can you take a guess how much you would have made? Just take a wild guess. First of all, you would have bought, instead of spending $2,200, about 30 to 35%, Ken. So instead of spending $2,200, you would have spent $115, excuse me. $115. Now, the stock moved over $2 and your investment was $1.15. You would have made about 30 to 45%, between 30 and 45%. But most of you didn't listen to me and you didn't do that. You just bought the at the money option. That's fine. You made your 5%. You got out of the stock. Everybody's happy. But you could have made 30%. Okay? So there a lot more money. Okay, David says I made 26% on my spread on MU. Okay, cool. Let me just repost that. Yeah, 30%. Yeah. Yeah, right here. No, 422.50, 425, not 420, 422. This one right here. Sorry. 420, 422.50. Yes, right here. I went on the wrong date. Right here, 11 days from now. And you could have done this right here, and you could have made more money. You could have done this, but the problem here is it's a little too pricey. You can only do this for $1.25 since the spread is $2.50. You can only do this for $1.25 or less. So my point is this. Look, how much is the spread here? $2.50. Roger, how much do we pay for this? At the most, 50% of this. So put a limit order in at 125 and see if you get filled. Hey, I'd rather pay $120 instead of $13.50. And you could have done that. You could have bought this right here for $2 and for $1.25 right here. Right there. So, anyways, there's a big advantage of doing this when you have an expensive option. Now, Roger, from now on, I'm going to do that all the no, don't do that. Let's say you have a stock like Procter and Gamble, okay? Well, these options are not going to cost $1,800. These options are going to cost $2, okay? You don't need to do that on a Procter Gamble. You need to do that on Micron, okay? Yes, in real time, Christoph, I'm recording it right now. So I want you guys to understand, that it's not one size fits all. I know that a lot of you, or some of you, you meet a guru and he's like, okay, I've been doing this for 30 years and this is the only thing I do. And I'm anybody who says that, they're going to miss a lot of trades. You have to be flexible. You know, it's like going to a party. I went to a party this Saturday night. It was an outdoor party right at the beach. I wore very casual clothing. My daughter had a bat mitzvah. I had to buy a suit under protest. My point is, the markets are alive. It's a live thing. It's not a binary thing. And you should be thankful that we have all these choices, because you see, if we didn't have all these choices, then the computer can do this very, very easily. All right. So when it's time to buy options, and I'll talk about selling options tomorrow, but when it comes to buying options, ask yourself the following questions. Actually, you know what? I got a great idea. Why don't I write this out for you and give you a little summary? Would you guys like that? Would that be helpful?
I don't think you'll have any argument on that, Roger.
I got to be honest with you. We used to have not a lot. We used to have a few people always putting forks in the road. Nobody puts forks in the road anymore. I can't get a good argument out of anybody anymore. Even Cyrus has gotten soft on me. All right. Love you, Cyrus. All right. So, the first question, what are we trying to achieve? That's the first question here. Buying options. How about questions Clyde would ask? All right. With a question mark. All right. All right. There we got positive. Took about 30% loss. Didn't take the trade because the last week. All right. All right. All right. What are we trying to achieve? That's the first question. Looking for a big move fast, looking to hold trade overnight. Is the trade expensive? Is the option expensive? Are the spreads wide on the stock and or options? When is earnings on the stock? When is dividend date on options? This one always gets me once every year or so. Nice. Good for you. Good for you.
Roger,
Yeah, let me
don't
just
look at the chat.
Yeah. I closed it.
You're
I finally
too
closed
easily
it.
distracted.
Yeah. When is the dividend date on the option? You got to ask yourself these questions. You got to ask yourself, what is the delta on the option? Ask yourself these questions. Does the market have high volatility or low volatility via the VIX? If you don't know the answers to these questions, if you haven't asked now, when I do an option trade, these pop up in my head instantaneously. I don't say to myself, gee, what is my watch list? I've done this a few times. But can you use market orders or limit? All right. Can use all of these things should be going through your head instantly when you're trading options. If they're not going through your head, you're not thinking everything through. If you use this watch list long enough, they'll become second nature. Here we go. Oops, what the hell? Can't even make a nice outline. All right. So, what are we trying to achieve? Let's go through this. All right. Long-term trade or short-term trade? Delta. Looking for a big fast move out of money. Oh, excuse me, I got hiccups. Or in the money. Right? Don't you want to know? You're looking to hold overnight. How much time premium? Oh, God, excuse me. Is the option expensive? Debit spread. Are the spreads wide on the stock or options? Should I skip the stock? When is earnings on the stock? Expiration date on option matters. When is dividend date on option? Not good for hold into dividend date. What is the delta on the option? How high is implied? Because if the implied volatility is really high, you're going to have to go in the money. You understand? Does the market have high volatility or low volatility via the VIX? Determines if we go in the money or out of the money. Can you use market orders, limit orders, stock or index? Oh, excuse me. All of these credit spread. You have to ask yourself all of these questions. You have to ask yourself every one of these questions at any given time. All right.
And Kane, just to ask a quick question here, Kane, is that essentially the same selection process that you go through?
Yeah. I would actually look at volume also. That's the only thing I saw there. And personally, I also look at gamma, but gamma is not necessary at all.
I have volume here somewhere. I have volume here somewhere. Where's my volume? Where's volume? I have it here. Is the spreads too wide? Right? Are the spreads wide on the stock and option? That's saying
Liquidity,
is there liquidity
yeah.
volume?
Yeah.
That's basically saying is
Yeah.
Does it have-
Underlying volume, I should have specified.
should I skip the
Underlying
stock?
volume.
Yeah.
Yeah.
Not enough volume. Right there. I mean, I could probably, there's more, but these are like right off the top of my head.
There was a question about open interest, Roger. Is that a consideration?
That's right here. That's the same thing we just talked about. That's this consideration right here.
Okay.
Right here. That's this right here. Are the spreads wide on the stock and options? That's volume. This will pretty much cover 90% of anything you have a question with in regards to options. Okay, now for spreads, start with delta of 0.50. Make sure that your premium debit is less than 50% of the spread between the two strikes. For credit spreads, make sure %50 of the spread between the two strikes. Capiche?
Capiche.
Real simple. Or regular options, delta 0.7, not 0.50. For scalps, delta 0.50, expiration soonest possible. I'm going to right now give you this document. Okay?
What a mensch.
I am. Here. So you can all play with it. All right? And this will get you started with some options. Does this help you a little bit? Does this help you folks? And I'll talk about credit spreads tomorrow. Should give you a little bit of something to think about. Yeah, we got about 100 people on the dock right now. All right. Now,
I would mention one other thing, and that would
Please.
just be just a general idea of a sense of where price might go. So if it's going to go really high, or do you think it's just going to go a little bit higher? So Roger said it as how fast of, oh, you said big also. I thought you just said how fast of a move, but how big of that move will matter also, because you may, depending on the situation, if it's not that high, you expect it to go up, but not that much higher, then you're looking more for the time component. So you move into a spread rather than a single
Yes.
option.
Yep. But looking for one of the first ones. Are we looking for a big move fast? All right. If you're looking for a big move, but it's not fast, or if you're looking for a small move slow, this is why I'm using very specific words here. Big move fast. And again, I think, oh God, geez, excuse me. I think I'm so sorry. It's the funniest thing, it's just like every time I want to say a word. If you guys spend some time with this, now I'm going to give you a good tip right now. Okay. A really good tip. Okay. And Matt, can you do me a favor? Can you post this link? I'll post it for you. Can you post it in the YouTube channel too?
Yep.
Here, let me post this for you. There you go. Here's my suggestion for you, okay? Here's my suggestion. Don't just sit there and memorize these. Don't do that. Take this list and go on an option expedition for a couple of hours. Look at a stock and ask yourself these questions, and it will all start coming together. If you just take this and you memorize this without any actual examples, it will do nothing for you.
Right.
But what you could do is you could start looking at hypotheticals and saying, oh, this is where I would buy an option that has a month. This is where I'll buy an option that has 5 minutes. This is when I would do in the money. This is where I would go out of the money. So this will help you with all of that, okay? Really help you. Instead of me giving you, what I wanted to do was, I want to teach you in a way where where it's an involved learning process versus me just giving you like, okay, these are the things you need to remember. No. Don't do it that way. Ask yourself these questions as you're looking through 15 stocks. And ask yourself, what would I do here? What would I do here? It will start making sense. It will all start making sense. You have to apply this. It's like going to this is like going to a driving class, right? they make you learn all this stuff, right? And you think you know how to drive, and then you get behind the wheel and you're like, I've never done this before. You can't learn to drive a car by reading. You all know that, right?
Mm-hmm.
The only way you're going to learn to drive a car is by driving a car. The only way you're going to really learn this instinctively, because here's the thing. Not every one of these situations will apply to every example. Some of these examples will be so clear where only you'll need to worry about two of these things. So you don't want to train yourself. Listen to what I'm saying right now, even though I'm having difficulty speaking. Listen to what I'm saying right now. You don't want to memorize this list and have it like, okay, I have this options list in my head. I have to check all these things. No. Don't do that. If you do that, you will never ever it'll never be the right way. You will have to familiarize yourself with these situations so that when you see that situation, you'll know, oh, okay, right now I'm just worried about, what do I care? I mean, you'll be like, okay, this is a scalp. I don't have to worry about any of that stuff. I just have to worry about buying at the money option and liquidity. Or this is a stock this is a clean option call. I don't have to worry about a spread here. So the key is knowing. You might have been here last week when I said, if you have a refrigerator repairman come to your house, he's going to come in. He's a good one. He's going to listen. He's going to say, maybe ask you one question, and he'll be like, I'll be right back. He's going to go to his truck. He's going to come back with a tool. He's going to go, and he's going to fix it. The guy that doesn't know anything, he's going to start applying lists and evaluations and statistical models and diagnostic tools. That's a guy that doesn't know what he's doing. The guy that knows what he's doing, he's going to come in there, listen to it for 5 seconds. He's going to say, I've seen this a million times. That's what this is for. It's to familiarize you with it, not to give you a check mark list. Don't do it that way. You will not learn anything if you do it. That's not how this is designed to be used.
Right. So, Roger, I need to step in here for a minute because we're coming up on a pretty significant event in just about 3 minutes. And folks, I just wanted to post this here for you that Roger and Kane are going to be together, but they're shifting into another room where they're going to be talking about the Sigma project. And it's a follow on to this discussion, but Kane is going to be sharing some pretty sharp tools that you need to know about in this exciting program. So Roger, once again, knowing that that's going to be starting at 1:00, I needed to step in here.
All right. I appreciate it.
Yeah, and I've also posted here for everyone in the chat panel, you're going to see a link here where you can click on and you can become part of that program. It's not in this room, it's in a separate Zoom room. I also need to give Roger a couple of minutes to collect himself, swallow your breath, drink water backwards, do whatever you have to do to stifle those hiccups.
Yeah, thank you. And we'll see you guys in the other room in just a few minutes.
Yeah,
all right?
Absolutely.
We'll see you guys real soon. Thank you, guys. But just a few minutes, we'll be there back. Thanks. Bye, everybody.
Exactly.
Thanks,
And
guys.
the other thing is this, folks, I just want to share with you is that this VIP session, for those of you, so many people have been saying, hey, is there possibility, to be able to see a replay of this? Absolutely. And I just posted this in the chat window. If you go to Roger's, YouTube channel, click on there and click on the live button, you will see today's VIP session, and you can rewatch all this great education on option trading that's there. And I'm going to post one more time for you guys the primer that Roger just shared with us. And that's he just gave it a quick little document, and I call it Roger's option primer. And if you click on that, that's where you'll find that information. And I believe Roger will probably post that in his Telegram channel and other places, but I wanted to make sure that you all had access to that as well. So,
And before you end real fast, a lot of
Yeah.
people in the chat were asking about gamma, and we have to remember what the exercise was. The exercise was, how do I choose the correct option for the opportunity that I see? And gamma does not fall into that consideration. Gamma falls into, is this a good opportunity or not? Okay, so I just want to make that distinction.
Excellent point. Excellent point, Kane. And thank you for that. And I know that you're going to be rotating into the other room as well. So
Yep.
thank you
Hope
for
to see you
being a
guys.
part of today's VIP trade room. And thank you all for being here. And I hope that you all will go ahead and join us in this next session. It's pretty exciting what we've got going on and what Kane and Roger are going to share with you. So there, once again, is the link to join us at the Sigma Project webinar, which will be kicking off in just about now. So with that, folks, I'm going to stop the share.